we will move on to the Honorable Mr. Olusegun Aganga, Honorable Minister of Industry, Trade, and Investment for the Federal Republic of Nigeria. Thank you.
Well, thank you very much. Last year I was here, I spoke about Nigeria briefly to most of you. So I will not go into details again as I did last year, but I would say that the Nigerian story remains strong, and like Africa, the story is compelling. The macroeconomic environment remains very strong. As you know, the economy was rebased recently, and now it's about $510 billion, which makes Nigeria the #1 economy in Africa today. It also means that that economy accounts for 21% of Africa's economy and more than 80% of ECOWAS economy. You had the press chairman of ECOWAS talk about ECOWAS here, Ghana. There are 15 countries in ECOWAS. Nigeria economy accounts for 80% of ECOWAS economy today. Growth rate remains very strong. Last Q2, 6.5%. Non-oil sector driving the economy at about 8.4%, which means that the oil sector is actually dragging the economy down in terms of growth. Exchange rate remains very stable. Inflation remains a single digit. Debt to GDP ratio is at 12% compared to 80% average in Europe, more than 100% in most economies. Deficit to GDP remains about 1.5% compared to the rest of the world, where the average is more than 5 or 6%. So we have had very strong fiscal discipline and macroeconomic environment. In terms of investments, or what's driving investments in the country, of course, even before we go into that, we already know that in terms of resource, the country is resource-rich. Market remains a very strong market with about 170 million people, growing at 3% per annum, likely to be the third largest nation in the world by 2050 after India and China. That's the future, with an average growth of about, age of about 18 years. So we have quantity, youth advantage as a country. In terms of where the money is going and where it's going in that sector, of course, we're talking about we have adopted the whole idea. Yes, we had commodities for decades. We exported raw materials for decades. Today, that has changed. It's about value addition. Therefore, we have a very robust industrialization program in the country with the right policies, sectorial policies. So, for example, in rice, we have attracted more than $2 billion. In sugarcane to sugar, $3 billion. In petrochemicals, more than $14 billion, meaning petrochemicals, petroleum products, methanol, and fertilizer plants. In other sectors, in fact, we're creating one gas industrial park in Ogedengbe, in Delta State, which will be launched later this year. In auto, we came up with a new auto policy. Nissan is assembling in Nigeria today. Peugeot is back in the country. Hyundai is back in the country. Ford, Toyota are talking about, hopefully will be back in the country within the next 6 months. There are 22 other automakers that have signified their interest to invest in Nigeria. All this, of course, the other area of investment will be, of course, areas that will support industrialization or competitiveness, meaning infrastructure, both hard and soft infrastructure. So GE, for example, is committed to working with Nigeria to generate about 10,000 megawatts of power. Siemens, about 10,000 megawatts of power. China Power, more than 20,000 megawatts of power. And of course, in terms of the soft skill, we're working with UNIDO to have a skills gap survey over the next 5 to 10 years and invest heavily in skills. That's what the youth require. I can go on and on about that, but let me focus on the topic of today. Intra-Africa investment is gaining momentum. Yes, the last speaker said it's 5%. But when you look at it in absolute terms, it has grown, it has tripled over the decade to about 22.8% in terms of the number of projects, and in terms of the value, it has also tripled to about 22.3%. Investments by Africans in Africa now accounts for second largest source of jobs in 2013. It was the fourth in 2012. Why the growth, of course, is because Africans understand the risk and the opportunities in Africa better than others. It's because they see that the opportunities there. They know that the average return, for example, in Nigeria, return is about 35.5%. One of the highest. The average in the world today is about 6.6%. And of course, the policies that are there to support investments and the regional drive by the leaders in the economy. And of course, Africa is expected to be, the consumer spending is supposed to increase about $1.4 trillion by 2020. And 1 in 5 people in the world today will come, well, 1 in 5 people in the world by 2020 will be from Africa. So that's the future, and that's where the money is going. Examples of intra-Africa investments include investments like, most of them are going to TMT, they're going into consumer products, they're going to retail products. So ShopRite, for example, from South Africa, is extending to about 47 new outlets in the continent, using Nigeria and Angola as a focus point. Standard Bank is opening up in Cote d'Ivoire, extending their footprint to 19 African countries. Breweries, MTN, of course, Tiger brand is doing theirs. And from the Nigerian perspective, our own Aliko Dangote is investing in 12 African countries in the area of cement. Kenya is the latest one, where he's investing about $400 million. He has a pipeline investment of about $16 billion in the next 5 years. And working with Blackstone and Calais, he's investing about $5 billion in power across Africa. So the momentum is moving, and a lot of Africans are beginning to invest in Africa. What do we need to do more to get more of that money? Is make sure that we do not restrict movements in terms of goods and people. For someone like Aliko, he needs to get 34 visas to move across Africa. That needs to come down. In Europe, you don't need that number of visas. Policy consistency, and of course, the most important topic is access to affordable finance, which is one of the topics for today. On access to affordable finance, we need to access, yes, sovereign wealth fund. Nigeria set up its own first sovereign wealth fund in 2010, and the whole idea was that that sovereign wealth fund was going to have 3 boxes. One as a stabilization fund, the second is a future generation fund, because oil is a depleting asset. The money in that fund is coming from excess crude oil account. And of course, the infrastructure fund to facilitate investment capital flow into infrastructure from Africa and of course from international. Pension funds, our pension fund today stands at about $13 billion. And the idea, yes, the money is there now, is how you use that patient capital for long-term investment into areas like infrastructure. We now have a pension act which is now more flexible and makes it easier for that money to flow into development areas where we need that money in the economy. Of course, we want to promote private equity, venture capital funds. We're creating a new fund, or actually a new bank, wholesale bank, to support and generate large long-term funding. And of course, we want to create an industrial development and strategic investment fund, leveraging in government assets and investments, and of course, coming up with structures, de-risking different asset classes to make it a lot easier for investment and capital to flow into those asset classes. What we need to do to sustain that and make sure that that continues, only 4 things. We talk about regulation. Yes, you need regulation. You need laws to back those sectorial policies. You need to open and deregulate, which is what we have done in power, for example. That's why today we have commitments of more than $60 billion going to power, because we have privatized power generation and power distribution. You need to have the policies in place to support it and then put them into law, back them with law, so that there's a certainty in those laws. I think overall, we're saying the momentum, as I say, is continuing. The story about Nigeria, the story about Africa, remains extremely strong, and it remains very, very compelling. Thank you very much.
It's intriguing and compelling to see the challenges and the promises back to back, and how important the themes that we talked about before with co-investment, de-risking, structure, having the governance at work. So this is very important, the principles you've set forward.
Doing business in Africa. You can't afford to be without Africa Investor.